Good afternoon. We're going to be covering something that's very, very, very important. It's called the BIX. It's called the CBO S&P Banks Index. One of the things that I would like to show you as well, these are the names that are going lower in the financials. In order for us to have a correction like we've had in the financials up here at 160 on the index, it's almost dropped 30 points from when we called it, and it's never recovered. And one thing about bull rallies is that you'd like to see this rallying to support the next bull top in markets. So the thing about it is it's called this is the index, and these are the names in it. So we've identified that. We've identified the weekly reversal in the BIX, okay, because we have. Not only that, we've identified here an SKF, which is a bull, or which is the ultra short financials. Since we made the high up here, that was the high. This was the low. On 218, when we called for the first reversal, you can see how the daily bear broke out off of this price level of around, let's just call this $54 to $62. That was a nice run. And it went through its daily volatility. You can see it, and it still kept going higher. Then, guess what happened? It had a nice reversal, and it came down. We've had one break, so we've had one breakout, two breakouts, and we're in our third breakout of the year right here. One of the things that I would like the people to understand is we have a daily buy signal on the Ultra Trust Financial Bear. The current move that has gone by is about, let's just call it $56 up here to the $60 and a little bit of change. That's a $4 breakout. And the thing about it is, in position management trading, when you're working with indexes and you're working with corrections, you want to learn when the bear cycle works. And when the bear cycle stops working, well, then the bull cycle gets support and goes up, because on each correction that we had here, correction number 1 and correction number 2, we are at a major breakout point of these tops right here. These tops where we had the correction and the correction. So basically, the bear ETF is also a shortable instrument, and so is a bull. It's also shortable too. You can short both. You can go long, you can go short. And in our trading division, we have a way of doing it. So basically, if we break higher here, the next top to break out is going to be that 62 handle. How would we know we're going to get there? Well, what we would be looking at is some of the index components that drive it higher. The weekly chart right here is going to tell us if we come down here to this weekly moving average, it's going to be a critical one too for the financials. If we come down to the 100-week moving average, and I'm going to give you that number right now, MMTs, and if I were you, please write it down as you always do. That price level on the 100-week is 135.1971, which is about a $3 move down still. If we land here and we do not break higher, if we land here and break higher, we would buy the bull ETF. If we land here and we sell through, then we're going to sell through and we'll let the bear ETF run. Remember, over here, back in 2010, when this thing hit the 100-week moving average, we rallied up and made all-time highs off of this 100-week. And the 100-week has still been rising, so the critical part is, where does it bounce on the weekly? So that when we're trading this one here, if we're going to bounce on the weekly, then this is going to reverse, and I'm going to want to get over and buy the bull one. Here we have the daily financial bull, which is the opposite of the bear that we are showing on the video. The thing that the MMTs must know is where is going to be the next big sell through. Well, let's take a look at the 2007 major support levels that the public and the bigger group of people are going to be looking at. That low right here. We're coming that. You can see that this thing is broke down. It's broke down on the daily chart. And it's what we call a bear reversal from the top. This was the top. Okay? This is a lower high. Once again, this top over here is where we were calling for a reversal. And that was on 4-7. Let's be clear. Let's be clear that the reversal had worked its way to its volatility stage right there. Across that line. This is what we call bear reversal and bull counter trend rally, to where we have this high right here is lower in the original reversal process. You can see that. You can also see that diagonally, this was where the selling had started to that move, and this is where your key reversals will come in. Now, we've been making a series of counter trends so every reversal has a counter trend, and we're going to make lower lows right here from where the original reversal happened in the financials. That's the bull. Now, on the other side of that coin, let's go back over to the bank index and the bull index look alike. Look at it. Look at the reversals here. That's the reversal here. This is the index. This is the index. This is the S&P Bank Index. Look at that reversal. Then take a look at the bull reversal here. Take a look at the bull reversal here. They are very similar in moves. The thing about it is that the bull breaks down, and if we break this low right here, that I'm going to give and we're in a daily sell signal on the bull ETF. Now the bull ETF, you could trade counter trends, MMTs, because when the short stops here and the bull rallies on up in volatility, price volatility works down, and upside volatility, and volatility is here to stay. So we're dialed into this one here. Up here on this daily, this is the daily ultra short, and you can see the differences between the short, the ultra short, when I'm breaking down here on this bull ETF, and we can short that outright, and you can go long this. So when that's breaking down, you're breaking out, MMTs. And the thing about it is that when we have market tops and market bottoms, that's when we like getting in here and working with the overbought ETF and the oversold bear ETF when the index that it trades in is reversing, and when we have broad-based selling over here in the financials, we know how to get short. And you can go long intraday, short periods of days, and long periods of days. So when I rallied up here, I was reversing here. So if I'm shorting that there and I'm going long there, I make money. If I'm short this over here and I'm long here, I also get to make money. So once again, it's all going to be about the FAS and the SKF. Both are bear and bull. And each one of them, the FAS right here, here's the volume. It's got plenty of volume, this FAS bull does. And that bull can be sold short. And it's a good one to trade intraday. The movement ratio is only $1.33. Okay, so you know 1.33 is going to be the ranges. Top to down or bottom to top. It doesn't matter. That's your yield. The other one, the FAZ here, the SKF, we're going to find it. And this is the bear one. So the SKF has a way of doing things. MMTs right here, what I am going to show here is the FAZ is also a financial bear, and the SKF is also an ultra short financial, and the one down here at the bottom is the FAS, which is the bull. So you've got two bears that are moving in one direction. So you can buy this down here. So when we have, and this is all about being long here and being long here and being short right here. When you're short there, you're getting that move. And so that's one transaction in a trend. The long side is one transaction. And both of these, buying both ETFs long, when we're in a major financial correction in the financials, then you can get paid that way. That's paid one. That's paid twice there. And shorting this one is 3 trades that you can do within one directional market, which we already showed behind here, which was the BIX CBO S&P Bank Index. So when you know the longer term corrections are happening, as we call them, and the secondary breakdowns are happening, then you can be paid over here. You can be paid nicely by shorting the bull and going long the bear and using the ultra short here. All have good volume on them. So when we take a look at the FAZ volume, total volume was 10 million. Well, look at that. 10 million shares there plus total volume on that one. And the other ones that are related to it, on the FAS, on the bull, that volume here is right around, total volume was 18 million. So you can short these. This was the range, $1.33. The ranges over here on this particular one was $1.93. That's the range from the bottom to the top. So there are yields in these instruments. They're not really big yields. The SKF was $1.87. Financial bear, financial bear. Doesn't matter. The two are bears and they move right here. FAZ and the SKF. And then let us not forget this one here. The financial bear is this one here. This is that daily chart. So we're going to focus on these trends and where we end up. And the thing about it is, if I'm going to break higher, there is a good trade. So where am I going to bounce on support? So if this is correcting and this drops down, I'm going to bounce. And these daily buy action were big on Friday, each one of these. So stay tuned. It's a special series on how to short the financials.